What's happening, YouTube? Money Day, guys and girls, wherever you're watching this from, you're here with Pastor Pips, and I'm about to bring you this week's market outlook. Without further ado, as we always do, let's head straight into the economic calendar. Now, one thing that I will say, guys, is for this week, it's a little bit on the quiet side. Of course, we do have a bank holiday for most of the world on Monday, tomorrow. So, what I would definitely advise and give you guys is to just stay out the market. It's definitely not worth trading, and it's just unnecessary. You will lose money. I can pretty much almost guarantee it. But hey, do what you will with that piece of information. Now, we do have some GDP, industrial production for China, with Royal Bank of New Zealand governor speaking as well during the evening, late hours of Monday, heading towards the early mornings of Tuesday. We have Royal Bank of Aussie meeting minutes with building permits for the dollar later on the afternoon. Now, swiftly moving on to Wednesday, we do have the CAD core CPI. So for my CAD traders out there, definitely want to look out for. Also got existing home sales and crude oil inventories for the dollar. And lastly, of course, we've got CPI for the New Zealand dollar. Now, Thursday, we have some more CPI, but this time around for the euro. We got retail sales for the Aussie, initial jobless claims with the main man himself, Mr. Jerome Powell, speaking, with also the Bank of England's Governor Bailey speaking as well. But yeah, Thursday looks to be quite interesting out of the lot so far, especially, with what's going on with inflation and with the US dollar. It will definitely be interesting to see what the Fed has more to say about the current climate. Now, lastly, we've got Friday, April 22nd. We've got retail sales for the pound coming in early mornings at 7 a.m. We've got German manufacturing PMI for the euro at 8:30. And for 9:30, we've got composite PMI, manufacturing PMI, and services PMI for the pound. We've also got one more release for core retail sales for CAD, with, of course, the ECB President Lagarde speaking for the euro. And to finish off the week, more of a high impact news will be Governor Bailey speaking to round off the week. Now, so far, in terms of, everything that we've been able to look at in terms of the economic calendar, okay, there's definitely some moves that we can capitalize on this week. However, there's nothing too crazy, like I said, except for Thursday, which seems to be the most interesting so far. Now, I'm going to kick things off by looking at the DXY, the US dollar currency index. Now, in terms of where we are, okay, we've hit, that all-time high. Well, sorry, not all-time high. Far from that, actually. We've hit some serious highs, especially when we're looking at pre-corona and during corona levels. Okay, we've hit the 100 mark at last, especially from the lows here that we called earlier on this time last year. Now, when I take a look at this area, I look a little bit closer. I'm going to actually walk through this one with you guys, okay? Going to go back to this little sort of mini consolidation, a mini range that we had here. And I just want to point out something that I found quite interesting myself, especially when we look at what happened before price, gave us that drastic drop. Now, when we look at this area, okay, we can see the last sort of area where price mitigated from after taking out the highs, right? And from this point on, which is my black line there, 100.527. Okay, that is where price drastically dropped off from. And, that's the area that kind of created the move to the downside. So this is the same area that I'm kind of looking to see if we can get a rejection from. And that's where we're currently sitting. We did get a slight rejection, but then, of course, the dollar gained some strength again and we've reacted. So, whether or not we want to take up the high, of course, is, there's a lot of factors, like I said, especially to do with inflation and what the Fed is going to do, whether that's going to be increasing the interest rate and that stuff of that nature. But in terms of the short term, I do see this giving us at least a pullback on a daily time frame to around 98.440. I would be happy with that. You know, nothing too crazy, just a little pullback to then potentially take out the high if price wants to do so. If we break structure, that's a whole nother story, and we will reanalyze once we get to that point. Now, let's move over to USDJPY. Now, USDJPY, I do believe 2-3 weeks ago went through this pair. In terms of, I mean, to be fair, I've been stalking this for a minute now, and we've actually hit my target, which was around the 1.26300 level, which was to actually clear out these weekly highs. Now, there's a lot of liquidity sitting above here. There's a lot of more money. There's a lot of trap money. Now, price may want to potentially push up, spike up higher into this area before we potentially get a pullback. Now, you know, when we do look at USDJPY, it is heavily dependent on what the dollar is doing. Now, you know, if I swing quickly over to the Japanese index, okay, this is basically the equivalent of the DXY, but for the yen, we can see that it's just been in turmoil for quite some time. And that is why we can see, you know, paired up with the dollar strength and the yen being stupidly weak, we've just seen this just rally, a crazy buy when we were looking at it from down here inside of our Discord, which is giving well over 1,200 pips. With that being said, make sure to head over to the website, www.licapital.co.uk, to get access to our Discord, giving you out all this free content. Now, let's move on to the setup. So with this being said, to be honest, guys, I think we should just keep on buying this until the market breaks structure, until we get a reason to stop buying USDJPY, which is, of course, the break of structure. We should just keep buying this. As we can clearly see, the market has been bullish for quite some time, and I don't see it stopping anytime soon. So in terms of the area that I do have for potential buy, there are, you know, a couple of areas that you could potentially look at. Of course, there's this area here, but, you know, this area might not hold. I prefer a much more of a deeper retracement in order for us to continue. But yeah, just have a look at USDJPY with the dollar, the DXY, to gain a better understanding of what's going on. Now, let's move on to gold. I'm going to go through quite a few pairs with you guys today. So this might be a lengthy market outlook, but hey, it's just more free content that you guys can just enjoy and, of course, replicate in your own time. So looking at you, gold, a few weeks ago, I was expecting gold to continue pushing. We did actually have a dip off first before we actually headed up higher. And of course, it's got to do with a lot of the tension that's going on inside of Russia and Ukraine. And to be honest, you know, even though we have come into the area where I did put out on Discord in our live stream, of course, to get a short from, I just don't see this stopping. To be honest, I definitely do think that these highs will be a target, especially when we look at the weekly picture and the weekly perspective. I do believe price wants to come out and fill this wick here for sure. So, you know, it is still quite tricky to trade gold at the moment because it is very fundamentally driven right now. So yeah, make sure you guys are reading up on your articles and, you know, getting into the know of exactly what's going on. All right, let's move over to the indices, being something that I've been focusing on as of lately. Now, looking at the S&P, before we, of course, move on to US 30, if I start off from the monthly time frame there, okay, what we can see that is price did break below this monthly pullback, okay? It's a very shallow pullback, but it's a pullback that's worth noting down for sure. Now, when we come to the weekly, okay, the weekly is in fact bullish because, you know, yes, we have closed beneath this high low here and we have come down. However, price has taken out, you know, structural highs. So with that being said, we can't just be overly bearish, even though the monthly is telling me it's bearish. So we can definitely still take out the low because the higher the time frame, the higher the significance. But with that being said, that means that my targets, okay, need to slightly change. But which is not a problem because when we're talking about the indices give us a lot of opportunities and a lot of pips and a lot of points to catch. Okay, it's a very volatile market. Sorry, so yeah, definitely one to look out for. So in terms of what we can see here on the daily time frame, we've seen a very lovely pullback, very lovely mitigation to create a low high, and price is well on its way to create that lower low. Of course, Friday, we had Good Friday, so the markets was pretty dead. You know, I am kind of suspecting that the market might open down and gap down. Hopefully it doesn't, because I would definitely like to be in some of that move. But, you know, in terms of a short-term target, I do believe this gap here is a target. So if we measure from here all the way down to where the imbalance starts, it's about, let's just round it up to around 700 points to the downside. So there's a lot of points and a lot of pips there for you to potentially make your move and catch a move to the downside. Okay, so, you know, in terms of the setup that we were looking at for this pair, okay, we can see where price is played out of. It's just well on it's just well on its way, to be fair. There's definitely more liquidity sitting at the lows here. I'd like to see price come and take that out as a shorter term target, if you will. But of course, the overall target will definitely be to see if the monthly picture can continue. But, you know, that daily imbalance there is quite a standout thing for me. Cool. So coming to US30, okay, we can see how the picture is slightly similar, but also slightly different at the same time. Now, yes, US30 does follow the S&P to a certain extent. It's not always going to be exactly the same thing, but we can see that US30 is giving us a bit more of a chance in a sense of catching the move a little bit higher up before it starts moving. Whereas the S&P is pretty much at the daily lows. Okay, as you can see, the US30 is sitting slightly above higher. So yeah, we can see the area that we've mitigated out of, and we are coming down. We're making our way down lower and lower and lower, especially playing out this 4-hour candle. We've played out of it before. We took out some more highs and we played out of it again. So like I said, these daily lows are going to be an automatic target. Okay, a shorter term target. However, on the daily time frame, we do have this imbalance here, which, you know, yet again, let's have a quick measure. From where we are to down here is about 650 points to the downside, of 650 pips, or whatever you want to look at as. Okay, there's a long way to go. Okay, this is what I'm simply saying. So there's opportunities there for potential moves to of course take place. Now, looking a little bit closer at this picture, in fact, I'm going to actually talk about this. One area that I would say for you guys to keep an eye out for is this small little area right here. Okay, very, very small area. You know, it could be an area where you may miss, but it's definitely an area that I'm going to be looking at, of course, to see if price can actually pull back higher. It might not necessarily do that, but, you know, in terms of trading US30, it's all about attention. Okay, where you put your attention, okay, you are most likely to get or find your entry, shall I say. So yeah, that little area there, if we can get that little pull back up higher and then price to come down and take out the daily low, it's a long way down. So even if you do put on a smaller lot size, it should feed you quite well. And I wasn't actually going to go through this pair. I'm going to go through this pair for one of, well, a few of our students inside, and of course, our subscribers inside of our Discord. Shout out to Joe. I am going to go through the NAS with you, or for you, shall I say. So this is a special just for you, my brother. Now, when we look at it, it's a very similar picture, of course, naturally, to the S&P and US30. Looks a lot closer to the S&P than it does to US30, to be fair. But yet again, we are seeing the similar picture. We do have this imbalance, okay, and we do have daily lows to take out. Now, the NAS has pretty much taken out the daily lows. Yeah, it did. Okay, ever so slightly. So we may actually see price retract first before continue to come down lower. Now, when we look at the weekly time frame, we have actually filled a weekly imbalance on the NAS, but, you know, I would still like to see if the NAS can come all the way down to around this weekly candle. I know it's a very long way away, and it might be slightly premature, but, you know, if JP Morgan has the target of 3,800 for this year's low, and if that is reached, then I don't see why NAS 100 won't necessarily get down to this price level. Cool. So those are the pairs for today, or this week, shall I say. Now, let me just change my screens. Guys, don't forget, okay? Where is it? Don't forget, guys, to head over to www.litcapital.co.uk. Check out our website. Check out a little bit about us. Whether you're new to economics, we're currently having a free course. So we're kind of teaching our course away for free for a limited period of time and for a limited number of individuals. So if you're someone that's always wanted to learn to trade and didn't necessarily want to spend any money, there is your opportunity. And with that being said, remember, every day is money day.